Hello, everyone. Welcome back to the Blockware podcast. We have a huge episode today, really big episode. We've got Blockware alum Joe Burnett with us. Joe, welcome to the show.
Thanks, Mitch. Glad to be here.
Yeah, I'm super excited for this. Joe, you and I worked together for a long time, and there's a lot of things I want to get into with you. You're one of the smartest minds in Bitcoin. But I think the first place I want to start is, are you still a believer in the 4-year cycles?
Yeah, it's a good question. And it seems like, if you are a believer in the 4-year cycle at this point, you're probably thinking that, okay, we are approaching the end of the cycle. Like it's 124,000 was the top, or we've got a few more months left and the top will come soon. I don't know if I necessarily believe in 4-year cycles exactly. I tend to subscribe to the idea that there will still be volatility in Bitcoin. And, I feel like, a good number of people have started to write off the idea that, oh, we'll never see a significant correction in the price of Bitcoin again. Winter is not returning, some people might say. I hope that's the case, obviously, as a long-term Bitcoiner and working at a Bitcoin Treasury company, it would make everyone's lives a lot easier. But I just remember, like, from 2021 cycle, I thought there could be drawdowns, but I didn't think that there could be like another roughly 80% drawdown. And then 2022 occurred and Bitcoin fell almost 80%. And so I'm just reluctant to say that it's going to fall. It's never going to fall 80% again. I think anything could happen. And I think like the dollar system at the end of the day is incredibly fragile. The nature of a debt-based money is when things are going good, everyone borrows more and takes out more credit and pumps asset prices higher. And then when everything's going bad, everyone's rushing for dollars and no one's willing to borrow money or no one can borrow money. And that kind of becomes a negative feedback loop in the wrong direction. And so, I think even if you subscribe to the idea that fiat is very fragile, then Bitcoin in the short term can still fall a significant amount in a relatively short period of time. So I think that's kind of my take, is like, I'm optimistic. And obviously I think Bitcoin is, the bear case for Bitcoin is digital gold, which is now roughly over $1 million per coin. I think it could happen really fast. Like it could happen in the next 12 months. I think it could also take another 5 to 10 years potentially. And the way that I think about markets is just, I want to be prepared in both scenarios. I want to be prepared to where if Bitcoin does rip higher, I just bought my last few sats for, around $100,000, but I also want to be in a position to where if Bitcoin doesn't go to $1 million in 12 months, then I don't want to be all in on strategy call options that are going to expire worthless. Right. So I kind of try to take a longer time horizon and be prepared for both scenarios in the short term.
Yeah, that makes sense. And would it be fair to say that any drawdown or volatility in Bitcoin comes from the fiat side, right? Because it's BTC/USD is the exchange rate. So is that kind of your belief that because the fiat system is still so volatile and so fragile, that side of the equation could be what introduces, massive volatility in the exchange rate and possibly a 75% drawdown?
I think that's probably a big part of it, if not the major part of the drawdowns. The second part of the drawdowns that I think, is fairly obvious once you kind of look back, but it's probably still worth iterating, is like Bitcoin historically goes on these incredible parabolic bull markets where, for example, in 2016, it was maybe started the year around $200. And then by the end of 2017, it was $20,000. And then, 2022, it was $16,000. Now we're at over $100,000. Like those are pretty solid returns in a very short period of time. And so, more so in the past cycles, this cycle, obviously, I think could keep going. But in the past cycles, like when you do 100x in, a 2-year period, it's not unreasonable for it to just correct a little bit, 100x back down to, 33x or something. And like, that's kind of what we saw, back in 2017 and 2018. And so I think, yes, macro and, the fragility of the dollar system kind of creates these bubbles and then these compressions within the bubbles or the popping of the bubble. But I also think that just rapid growth in of itself helps, kind of sows the seeds for a potential drawdown. Obviously, Bitcoin still is going up massively over a significant period of time, but when something goes up 100x, it's not unreasonable for it to fall 50% or a little bit more than that just because it went up so fast to begin with.
Yeah, that's more or less where I'm at. I definitely parked myself firmly in the camp that I don't think we have another 75% drop, but that's because I don't think we necessarily get another 100x like in 2017. Could because where I'm at is like the market's now 100 times bigger there than it was at the start of 2017, right? It started that year around $1,000 per coin. Now we're over $100,000. So do you think it's possible that Bitcoin makes another significant move kind of on par with that in terms of percentage basis? I mean, from the 2022 bottom, I guess we'd be looking at 4 to 500K to see a 20x, kind of a similar move.
Yeah. I think a 20x is still on the table from the bottom. Like 4 to 500K wouldn't be terribly surprising to me over the next 12 months. Like kind of like we mentioned at the start, like Bitcoin gold parity is now north of $1 million, maybe like $1.1 million, and to me, Bitcoin is significantly better than gold. It's more scarce, more portable, it's more divisible, more fungible, and if it's better, then perhaps it's not just worth the equivalent of gold. Maybe it's worth multiples more than gold. And I think there's unlike a technology company or just any company that might be like, oh, we need to make X billion dollars by 2030 to like justify our valuation today. Like Bitcoin is what it is today. It's not really going to change much. It's already, in my opinion, better than gold. It's just a matter of the market and market participants all around the world coming to that conclusion and repricing Bitcoin in a potentially fast way. So I think it could happen fast, which is why I feel like you never really want to be out of Bitcoin and you never really want to time the market. But like we talked about, it could also happen slow if people are slow to recognize this, or there are other hurdles to short-term adoption.
Yeah, and would you say it's fair to say that gold going higher, because gold's been on a generational run this year? It's up like 30% in 2025, which for kind of an analog asset, that's pretty unheard of. Would you say that the higher gold goes, that's bullish for Bitcoin because we can reasonably expect Bitcoin will be at least worth what gold is?
Yeah, I definitely think so. And other people have said, wow, like it's interesting that in the short term gold is doing so well and Bitcoin happens to be like going sideways, like for this year is a good example. And it's like, yes, that's true for the last 9 months or 8 months or so, but it's like still, if you zoom out over a long enough period of time, like they're both going up in dollar terms, which is logical because basic consumer goods are going up in dollar terms. So obviously anything more scarce than basic consumer goods are probably going to be going up in dollar terms. Now, measured in Bitcoin terms, gold has, a few periods where it does well, like maybe like the last 8 months. And by doing well, maybe it's up like 20% in Bitcoin terms. But like over the long run or over any significant amount of time, gold's, been getting crushed by Bitcoin, been going down in Bitcoin terms. And I expect that to continue for maybe forever.
Yeah, I think so too. You put out a tweet within the last day or so, and I'm going to read it back to you. If you're an economist that believes in the efficient market hypothesis, persistent demand for both leveraged Bitcoin equity and over-collateralized Bitcoin credit should be fascinating information. The market may be signaling hyper-Bitcoinization is the default path forward. Now, I've been in Bitcoin since about 2020, and I've heard hyper-Bitcoinization 100 times or so. Can you explain what this means to you? How would you define hyper-Bitcoinization, and what does that look like?
Yeah. I believe like the word started from the Nakamoto Institute, which was founded by Pierre Richard, Michael Goldstein, and I think Daniel Krawitz. They were basically, this may have been starting 2012 to 2014, roughly around then. They were just like writing very logical, common sense, like blog post about Bitcoin. And it was, I didn't learn about Bitcoin until 2017, but this was like one of the few resources available back then to like kind of get a grasp of what Bitcoin is. Obviously, like that was before Michael Saylor, that was before the Bitcoin standard was published, and so on and so forth. So there weren't really many good resources back then. But one of the articles on the Nakamoto Institute, which is a website that still exists, was called Hyperbitcoinization. And it was basically, the idea is like, okay, well, you have hyperinflation, which most people know about. It's like when a government currency just gets completely obliterated, it's worthless, there's just massive inflation, prices of everything go super high, and the currency is worthless. His idea of hyperbitcoinization was like, well, it's kind of the opposite. It's the hyper monetization of a new form of money. In this case, it's this new form of digital money. And I think that, like, you can think about hyperbitcoinization in like two different ways. Like, one can be a short-term hyperbitcoinization, one can be like long-term hyperbitcoinization. Like, to me, it's like, if you think about monetary history from a very broad sense of, gold, salt, glass beads, ray stones, silver, fiat money, so on and so forth. Now Bitcoin, it's like, in the thousands of years of monetary history, well, like, Bitcoin going from a $0 asset to a over $2 trillion asset in 16 years, like, that's pretty fast and pretty incredible. And in a way, like, we are kind of living through hyper-Bitcoinization. Like, this asset is growing, Saylor talks about growing like a 30, 50, 80% CAGR over certain periods. Like, that's absolutely mind-boggling growth for a scarce bearer asset. Now, like, in the short term, people think of hyperinflation. There's like specific definitions of it, but I believe like one definition is maybe like 50 to 100% or more consumer price increases over like an either quarter or an annual period. And so maybe like, Bitcoin's CAGR goes above 100%, 100% on an annualized basis, then maybe like we're living through like a short-term hyper Bitcoinization. But yeah, the idea behind, that Twitter post that I shared was just the idea that, okay, well, there's simultaneously demand for leverage Bitcoin equity, which is borrowing money and buying more Bitcoin. And then there's also demand for fixed income products that are backed by Bitcoin and over collateralized Bitcoin that offer a higher yield for lower risk compared to, many of the other fixed income products that exist in the world. And so it's like this weird, kind of coincidence that, okay, well, people are willing and interested in the market is willing and interested to borrow money at a slightly higher rate to get more exposure to Bitcoin. And people are bidding, stocks like Strategy or Semler Scientific or all these other Bitcoin treasury companies. And then at the same time, they're able to issue these fixed income products that the market is also bidding because it's better than all the other fixed income products that exist. And so it's like, it kind of becomes, this, positive feedback loop where both kind of benefit the other. And the fact that both kind of exist at the same time is kind of hinting at the idea that the market wants more and more of both of these products. And as more and more of these products like come to market and get bid by the market, then to me, it's a sign that like the market is converging on Bitcoin as like the sound monetary collateral.
That's really great. And I want to unpack this further. First, I want to pull on the hyper Bitcoinization thread because that's interesting. People think about it, and this is the way I've always conceptualized it, is like hyper Bitcoinization is I can go and spend Bitcoin at Whole Foods or they pump my gas and pay in Lightning and whatever, and Bitcoin's everywhere. But the way you're describing it, it's really not like that. It's kind of more subtle, right? If hyperinflation, like you said, I think it's prices doubling every 12 months or something like that, then Bitcoin, doubling every 12 months could be categorized as hyper Bitcoinization, and Bitcoin's doubled the last 2 years in a row. So you're kind of right. We are in hyper Bitcoinization when you think about it like that.
Yep. Yeah. I mean, at a certain point, obviously, it just comes down to definitions and how you want to define the word. And, obviously, it's not really a real word to begin with. So it's kind of funny. But yeah, I mean, I think, like, generally speaking, if we fast forward 100 years, we're probably going to look back and be like, yeah, like, obviously from 2009 to 2030 or 2040, that was hyper Bitcoinization. And like Bitcoin went from zero to, $100 trillion asset in a relatively short period of time and became the money of the world or the foundational collateral of the world.
Right. It is funny when you try to zoom out, like really zoom out, because in our, where we're at, 10 years is a long time. That's that's a low time preference investment. You're buying and holding something for 10 years. But like you said, Bitcoin's been around for 16 years. in the grand scheme of humanity, that's nothing. That's like a
Yeah.
second, right? And so it's funny when you see the charts, it's like the Bitcoin price, but the x-axis is like going back like 300 years. It's just a straight line up. It's like Bitcoin
Yep.
didn't exist, and then all of a sudden it existed, and it's worth trillions of dollars.
Yeah, exactly. And then you can look at a number of assets like that. I saw like someone post like the S&P 500 over the last 100 years. It's like obviously the S&P 500 has gone up a ton in dollar terms. Like high quality assets measured in dollars over a significant amount of time like are designed to go up in value. So it shouldn't be surprising.
Right. That's a great point because the first stock exchange didn't exist until 1609. And the first stock exchange in the United States was, I believe, the late 1800s. So when you zoom out in terms of humanity, it's like we're in 2025. The stock market is, that controls the vast majority of the world's wealth, but it really hasn't existed for that long. So,
Yeah.
yeah, Bitcoin's, following a very similar, but probably even more powerful trajectory. Now, let's unpack the other part of this tweet, which is the leveraged Bitcoin equity and the over collateralized Bitcoin credit. Would it be fair to say that because there's so much demand for both these products, it's really just demand for Bitcoin, but people that they have different requirements? Are these vehicles I would say they're necessary for hyper Bitcoinization. Like you can't get there on pure raw the raw commodity of BTC. Is that kind of a fair take?
Yeah, I mean, I think obviously Bitcoin treasury companies and the securities that they issue into the market are built on the idea that Bitcoin is this permissionless, decentralized, perfectly scarce form of money. Obviously, if you buy a Bitcoin treasury company, or even if you buy Bitcoin on a custodial exchange, you lose the permissionless property of it unless you withdraw or buy real Bitcoin. But it doesn't mean that people aren't going to want these securities, or that you shouldn't even necessarily want these securities, right? So I think like people buy these securities specifically, I guess, for two reasons, and I can maybe talk about like the equity first, the Bitcoin treasury companies themselves. One is, and these are broad, two broad reasons, but one is the idea of this intelligent leverage, right? Before, if you wanted to buy more Bitcoin than you could afford, you would have to deposit your Bitcoin as collateral, borrow against it, buy Bitcoin on another exchange, and then hold the Bitcoin. But when you use Bitcoin as collateral directly as an individual, you might be on a leveraged Bitcoin exchange like BitMEX, and if Bitcoin falls a certain amount, you get liquidated. You might be using something like Unchained, where you deposit Bitcoin as collateral, borrow against it. Bitcoin falls a certain amount, you also can get your loan closed out and get liquidated. And so there's always a problem trying to get leveraged Bitcoin exposure, because if Bitcoin falls a certain amount, your position will get closed out and you'll be a forced seller at the worst possible time. And so what Strategy has done is they've pioneered this long duration credit and paired it with this long duration asset like Bitcoin. And kind of like we're talking about Bitcoin, I don't know what it's going to be over the short term, but I'm fairly confident over the long term it's going to perform very well. That's why I think it's long-term savings technology. And so whether it's convertible notes or preferred equity, where you're effectively pairing this, creating this long duration fixed income product, using that capital to buy more Bitcoin, you kind of prevent the problem of, okay, Bitcoin falls in the short term. Well, for a public company, like there's no, if it's just convertible debt or preferred equity, that's not necessarily any liquidation price, and which is very attractive, which means you can weather short-term drawdowns, which Bitcoin obviously has had in the past. And so it's potentially like one of the most efficient ways to get an intelligently leveraged long duration Bitcoin position. The second way that I think people are buying these Bitcoin treasury companies is because, one, there's a lot of like institutional capital out there that can't buy Bitcoin directly. Semler had an interesting slide in one of his presentations where he basically just showed that 97% of institutional capital in the United States can't buy, or is mandated to only buying equities and fixed income. So they can't buy commodities. And it kind of makes sense because there are no good commodities. Arguably, gold could be a good commodity, but it's still debased every year. forever, and all the other commodities are incredibly debased forever. We're getting more efficient and more productive at producing all of them. So historically, it's made a lot of sense to not buy commodities and obviously buy like productive assets. Now we have this Bitcoin thing, which is like a super commodity that's living through the monetization phase. And so there's kind of like a unique dynamic where a lot of this capital is trapped. You can't buy Bitcoin. It's bid equities and fixed income way too high because the money is broken. So we have to keep buying all this stuff regardless of valuation. And now we have a new form of money that's like, hey, this form of money exists because your current form of money is really bad and you're monetizing everything. And so Bitcoin is just now sucking the monetary premium out of all of those asset classes, and Bitcoin treasury companies and the securities that they issue are basically just providing a product to the institutional capital that starting to recognize that Bitcoin is important and deserves an allocation, but they're not able to necessarily change their investment mandates to buy Bitcoin directly. And again, like, treasury companies can be seen as amplified Bitcoin because they borrow money to buy more Bitcoin. So you can, amplify the future returns of Bitcoin, both to the upside and to the downside. And so that's also appealing to institutional investors.
Yeah, that makes sense. And to summarize for the audience, the two reasons are the intelligent leverage, which is inaccessible to the everyday person, and then the capital restrictions, so to speak. So, if you're running a hedge fund or a school endowment fund, you can't actually buy Bitcoin, put it on a cold card, and shove it in your desk, right? You have to have a different type of solution. One thing that a lot of people have been questioning recently, especially in terms of strategy and their preferred equity, is how they actually pay the dividends. So conceptually, this makes sense to me. If you can borrow at, their stretches at a 10% rate. So if they can borrow at a 10% rate, buy Bitcoin compounds at 30 to 50%, they're obviously going to do really well making that spread. Now, the problem is they have to pay that 10%. And so you have a couple options. You could use the free cash flow from your core business. You could issue more equity or preferred to pay the existing preferreds. And I think that's where people get a little iffy with, calling it Ponzi adjacent. Or option 3, you could sell the Bitcoin, which they've made pretty abundantly clear that that's not an option. And I know you don't work for strategy, you work for Semler, but how do you think about this in terms of, is there a limit to how much preferreds they could actually issue before the interest, gets too high where they're unable to service that consistently without actually selling the Bitcoin?
Yeah, it's a really good question. And I'll talk about kind of broadly and probably more in particular strategy, since they're the ones that are pioneering the way. There is certainly a limit as to like how much preferred equity they can issue relative to their Bitcoin on their balance sheet. I mean, I think historically, I don't know if it's still the case today, but historically, Saylor mentioned like his credit to Bitcoin NAV ratio would be anywhere, long-term ratio ideally is like 20 to 30%. And he said it it could change over time. And as volatility of Bitcoin drops, maybe he can increase that. But like, that's kind of like the general idea of, you want to put 80% down in equity and borrow 20%. And so in that way, Bitcoin treasury companies, strategy in particular, are kind of like fairly under leveraged, right? Like, real estate, you put down 20%, you borrow 80%. Strategy, being one of the most leveraged Bitcoin treasury companies, has put down 80% and borrowed the remaining 20%. As far as like how do they pay the dividends on their preferred equity, I think you nailed like the key points, right? Like they can issue common equity, which is kind of seems to be what they're doing right now. They can issue preferred equity. They could sell the Bitcoin, which yes, they've said that they might never do that, and maybe they stay true to that. But theoretically, they certainly could do that. And then also they could suspend the dividend payments or pause them. Like I believe STRD, the way they've structured it, they can pause and not even have to pay the dividends that they missed. Some of the other ones, they can pause for a certain period of time, and eventually like board members start to lose their seat if they don't resume the payments. And then payments that they missed, they're going to have to repay at some point in the future. Saylor, I thought, did a pretty good job of answering it on the call, or their like past earnings call, where it's like they could see, and I don't remember the exact numbers, but roughly something along the lines of if Bitcoin falls 75%, they may have like 10 years worth of Bitcoin on their balance sheet to meet the dividend payments, going forward. And so it's like, it's structured in a way that like, Bitcoin can fall a significant amount of time. And if it falls for a significant amount of time and, stays there for 10 years, then yeah, like Strategy and Bitcoin treasury companies pursuing this intelligent leverage strategy are going to be in trouble. But if it does it like what it historically has done and it falls 75% or 80%, stays there for like 6 months or 12 months, and then eventually goes back up significantly higher, then, it's not that big, not necessarily a huge deal. And so, yeah, I think it will be interesting to see like how they navigate a bear market. But there's also, the scenario where like we don't have another 80% drawdown. And in that case, the strategy works even better than it might today. So it's going to be interesting to see what happens with them.
Yeah, I think you hit the nail on the head there, because that's an interesting stat. So what Saylor said, if I understood you correctly, is the existing amount of Bitcoin they have, Bitcoin could do nothing for the next 10 years. They'd still have enough to cover all the dividends. And so, of course, in that scenario, if you're a strategy shareholder, if Bitcoin does nothing over 10 years, we were just wrong about Bitcoin,
Yeah.
right? That's exactly. But then the preferred equity holders, they still get paid out. And that's their whole point, is they want some Bitcoin exposure, but they don't want all of the risk. And so this kind of bear market doomsday scenario for strategy, I mean, it's not really a FUD or a gotcha as much as like, yeah, if Bitcoin doesn't go up, this isn't going to do well. Of course, the common stock is a Bitcoin bet.
And even in this scenario, it's it's very reasonable for strategy to underperform Bitcoin, even if Bitcoin does fall 80%, right? Like people have to remember, like this is this is an intelligently leveraged Bitcoin exposure, which means holding all things equal, it should amplify the future returns of Bitcoin, which works to the upside, but it also works to the downside. And so, Bitcoin falls 80%, strategy is likely going to fall significantly more than 80%. And so if you're not comfortable with that, then, you should do some research and think about that before you buy strategy.
Right, exactly. I kind of like the framework you used. You didn't say the word mortgage, but that's where my mind went. It's like with a mortgage, that's like the most accessible form of intelligent leverage to an everyday person. But you're levered pretty high. You're putting down 20% in most cases, and you're borrowing 80%. We're just, mortgage holders are fortunate that retail or housing prices, I should say, are not mark to market 24/7, right? Because if you borrowed 80% and then there was a 35% dip in housing, they're not calling your hey, you got to pay up, you're getting margin called. But with Bitcoin, that does happen. It is mark to market 24/7. So you can't, you do 80% down, borrow 20%. And that way you have plenty of wiggle room there. What specifically is Semler doing to prepare for a potential 80% drawdown in the Bitcoin price? Is there any way you can kind of maybe get out of that ahead of time and make sure you're not totally smoked in such a scenario?
Yeah. From a Bitcoin strategy perspective, I think it's important to be thinking about, okay, well, what happens if Bitcoin does fall 80%? Because I personally do think that it could happen. I'm not saying it will happen, but it could. The other thing is you don't know, like we talked about earlier, Bitcoin could go to 500K or a million also in a short period of time. And you kind of want to maximize your upside for that while still being prepared for a significant drawdown. The way that Semler, the capital structure is structured right now is, we have an outstanding convertible note that was used to borrow $100 million to purchase additional Bitcoin. That convertible note doesn't mature until 2030. So we have, roughly 5 years until we owe the $100 million back, or, that converts to equity, or Semler would need to refinance. So it's good to have, again, this idea of long duration debt paired with long duration Bitcoin. If Bitcoin is not, higher by 2030, then perhaps like our thesis is incorrect anyways. And so that's kind of like our, the main thing is making sure that all of the liabilities that we have, or the primary liabilities that we have, are paired with, our long duration, right? So you don't have to worry about that. And then the other thing that's kind of interesting is like on the convertible note, we have it's a relatively lower interest rate. It's 4.25% relative. And if you look at some of Strategy's preferreds, they're high single digits or low single digits as well. And so like those are some like we talked about, it probably wouldn't be a huge issue, but those are cash outflows that if Bitcoin does fall 80%, you'd rather not have those cash outflows at the bottom of the bear market, where you're either issuing equity or selling Bitcoin to pay for that, or suspending the payments. So I think like at the moment, if you compare Semler to Strategy, you could potentially argue that we're like Semler is like slightly more leveraged than Strategy. It's like barely anything, like a credit to Bitcoin NAV ratio. But the liabilities that are owed are potentially like less than Strategy at the moment. I haven't added up Strategies and Semlers and compared the two necessarily, but looking at the interest rates on Strategies preferreds were compared to the interest rate on Semler's convertible note, their obviously Strategies is higher and Semler's is lower. And also Strategy does have outstanding convertible notes, and I believe their next one is due in 2028. So they have 3 years until that one potentially matures. Where again, it would either convert into equity if Bitcoin's higher, but if Bitcoin's lower, then they would need to potentially refinance that or figure out how to pay that off at a lower Bitcoin price. Hopefully by 2028, obviously Bitcoin's significantly higher as well. But in the case of an 80% drawdown, like that's kind of how I'm thinking about it, at least from like a Bitcoin Strategy perspective at Semler.
Yeah, that makes sense. As long as your debt is long duration, it's not callable, you can endure those bear markets. And we've seen this with Strategy because they survived the 2022 bear market, and it ended up being a great opportunity to pick up their equity at the bottom there. Are Bitcoin Treasury companies in competition with each other?
Yeah, it's a great question. It's funny because I've been thinking about this a little bit, where you look at like the titans of industry throughout history, whether that's oil and gas, banking, or technology, or any other major industry. You haven't really had the leader of the industry going out there, publishing their exact playbook and encouraging the entire market to copy their exact strategy and literally do exactly the same thing that they're doing, which is exactly what Michael Saylor is doing at Strategy. And, it's been 5 years now. It's one of the best performing public stocks in the world. Still very few companies of any scale have really copied his strategy. And I think that's got, at the very least, very fascinating. So like, is it too competitive? I think like the MNAV compression that we've seen maybe over the last month has partially been a result of more of these companies coming to the market, which is like reasonable. But as far as like the long-term strategy of holding Bitcoin and borrowing a little bit of money against that Bitcoin to amplify the future returns of Bitcoin, like anyone can do, any public company can do that. And like perhaps if you pair long duration credit with Bitcoin, long duration asset, everyone could potentially win together. Now, if 100% of the companies in the world start doing this and no one wants to lend dollars, then maybe that's hyperbitcoinization, and Bitcoin's, $10 million, $100 million per coin, or, a nonsensical dollar number. But no, I don't think, I don't necessarily think it can get too competitive. It's similar in my mind to saying, oh, well, other people are holding Bitcoin, so it's too late to hold Bitcoin. Like that's not the case with an individual. It's not the case with the corporation. It's just like the internet. Like, is it too late to adopt the internet, whether you're an individual or corporation? No, like you should probably be using the internet if you're an individual or a corporation. Bitcoin's just a tool for your balance sheet. It's a new monetary technology. You want to make sure you're holding the best money, whether you're a corporation or an individual. Now, like with the MNAV compression, it's like, are the days of a Bitcoin treasury company trading at a 10x MNAV and just selling equity and buying Bitcoin like over and over again? Like, are those days gone? Maybe. But again, like I don't think that destroys the long-term thesis of holding Bitcoin, using intelligent leverage with Bitcoin, and then maybe pairing a strong operating company with the Bitcoin treasury as well.
Yeah, I think that was well said. And you certainly don't see the industry leader publishing their playbook in any other industry other than Bitcoin. It is super fascinating because the more Bitcoin treasury companies they're bidding up Bitcoin and strengthening the other Bitcoin treasury companies' balance sheets. It's really, there's nothing like it. And I think the comparison to the retail or individual level makes a lot of sense, right? Any Bitcoiner would say, hey, no coiner. Just because I'm in Bitcoin before you doesn't mean you shouldn't be in Bitcoin. Upgraded the better technology. That framework's no different for public companies.
Yep, exactly.
You tweeted recently. Let me find this exact quote. This one's great. You're always putting out banger tweets, banger one-liners all the time. Altcoin treasury companies are built on sand. Bitcoin treasury companies are built on steel. Can you elaborate on that? And why is Semler so hyper-focused on Bitcoin?
Yeah, it's a great question. Yeah, I mean, this was partly inspired by Saylor. Like, I believe Saylor has kind of said that Bitcoin is like economic steel, which I think is a pretty like interesting analogy. And another analogy that I really like is if Bitcoin is economic steel, Michael Saylor is the one that built a bridge made out of steel over big river, big water thing of water, and he basically like just built the bridge. He walked out on the bridge and he just looked at the world and was like, "Hey, this bridge made of steel works." And he stood there. He's been standing there for 5 years, and the thing is incredibly strong, incredibly powerful. It's more powerful than ever, really. It's got like it was I believe it was like a $500 million company initially, and then now it's like $100 billion company, like one of the fastest growing companies in the world. And yeah, like it's all built on economic steel of Bitcoin. It's just if you're using lumber or something to try to build a very tall building, like you can only build it so high before it doesn't work as well. Like Bitcoin as a monetary technology, like you're as someone that holds money, you don't want your money being debased over time. And if it's if you're using Raystone, silver, salt glass beads, like the history of money is other people finding that money and trying to debase you over time and taking your actual economic resources that may be businesses, real estate, or whatever else. And it's like you need to pick the best money, and Bitcoin is the best money because it has the best monetary properties. So that's kind of the idea behind Bitcoin being economic steel. And we've seen like when the market gets hot, we see other Bitcoin or other treasury companies coming to market saying, "Oh, I'm an Ethereum treasury company," or "I'm a Solana treasury company," or Dogecoin treasury company. I saw that recently, and it's just like it's not a good form of money because Bitcoin is the best form of money because Bitcoin has the best monetary policy that has the least amount of uncertainty. The whole purpose of money is to converge on one common, most saleable tool. If we didn't need money, we would just be bartering back and forth. We need money because we can't barter back and forth. That's very inefficient. So we converge on one best tool. Bitcoin is that best tool. And so these altcoins are kind of just built on sand because they're inferior tools. And if you pair leverage with an inferior tool, or you try to build a massive sandcastle right before the tide comes in, or you try to build like 100-story building made out of wood, like it's not going to work out well in the long run.
Yeah, I saw that the Dogecoin treasury company. I think it dropped like 50% on the announcement. It's just not the same thing. There's Bitcoin and there's everything else, and so if you try to do the everything else, it's not going to go well over the long term. And I love this imagery of Saylor out on the bridge. He's been out there. He's like, "Everybody, come join me." And it took a while, but now we're starting to slowly see. It's like that video of the person dancing at the festival. You have the first person dancing, and they're out there for a while by themselves, and then eventually you get number 2, and then you get number 3, 4, 5, 6, very quick succession after that. I think we're seeing the same thing right now with Bitcoin treasury companies.
Yeah, I agree.
What do you think? This is pretty high level and not necessarily super specific, but flows between Bitcoin and Bitcoin treasury companies, because in historic Bitcoin cycles, you had this kind of oscillation between Bitcoin getting bid up and alts getting bid up, and you would see capital rotations between the two different asset classes. Do you think we'll see similar things with Bitcoin treasury companies and Bitcoin, where Bitcoin treasury companies are viewed as this higher beta, higher volatility asset, and after they pump, you'll see the holders of those equity take profits into Bitcoin, and then Bitcoin would pump after? Is that something you think might play out over the coming years?
Yeah, I think something like that might play out and kind of has been playing out, where you'll, like I feel like earlier this year we did see like a phase of the Bitcoin treasury industry, exploding. A lot of the companies were trading at, high valuations relative to the Bitcoin on their balance sheet. And because of that, maybe is because the market wanted this high beta version of Bitcoin that's, lower risk compared to altcoins, right? Like historically, some people would buy altcoins thinking that obviously, you can buy this altcoin that has like a tiny little market cap. If a little bit of money comes in, then it could outperform Bitcoin over a short period of time if there's just a rush of liquidity. But at the end of the day, it's like, okay, well, you're buying a worthless altcoin. So like you're obviously hoping that you can dump that on someone else at a higher price in the future, which to me is more of like a casino type game rather than like an actual like logical long-term game. And now the Bitcoin treasury companies exist where, okay, you have this like high beta Bitcoin exposure that is actually buying Bitcoin too. Like, it's not like it's just worthless air. Like, these companies hold thousands of Bitcoin on their balance sheet. And so like when these companies trade at a premium, like they have in the past and many still do today, they issue common equity and buy more Bitcoin. And so it kind of creates like this weird synergy between Bitcoin and treasury companies to where whenever speculative capital flows into these more leveraged Bitcoin plays, the Bitcoin treasury companies, it's in their incentive to convert that excess speculative capital into more Bitcoin. And then, maybe some people decide to buy Bitcoin at some point, or maybe people, for whatever reason, keep buying treasury companies. Well, a lot of the capital actually just ends up flowing to Bitcoin either way. Will people rotate out of treasury companies and into Bitcoin? I don't necessarily know if that will happen like at size or in scale. On a long enough time horizon, maybe. But I'm not too sure.
Yeah, that makes sense. I mean, they're ultimately funneling capital back into Bitcoin. So even if treasury companies are specifically catching a bid during a specific quarter, that capital is going to Bitcoin. Unlike the prior altcoin seasons of old Bitcoin cycles, where that capital is probably just not going back into Bitcoin, it was going into the altcoin founders' bags so they could buy Gucci purses and whatever they were purchasing. Which when you think about it like this, I don't understand. There's a section of Bitcoiners that are very anti-Bitcoin treasury company, which doesn't make sense because the treasury companies are buying Bitcoin. They're a net positive for the Bitcoin price. So I don't understand what the hate's for.
Yeah, I mean, like if you think about like the core Bitcoin ethos of holding a censorship resistant permissionless money, it's kind of funny to be buying and talking about Bitcoin treasury companies because it is a non-permissionless like custodial kind of form of Bitcoin. It's not even custodial, like you just hold shares of a company that holds Bitcoin on its balance sheet. So like it is kind of like a little bit ironic. However, that doesn't necessarily mean like it was never going to happen and that it's a bad thing that it's happening, right? Like, if you think about like the history of Bitcoin, if you were looking into Bitcoin in 2010, the only way to get Bitcoin was like download the Bitcoin software and like start mining it. And that was how you accumulated Bitcoin. It's like, obviously there's going to be like other additional layers that make it easier for relatively normal people to get exposure to Bitcoin. I mean, like think of most people in the world today or most people in America, they don't really care about investing. They may have their 401k that they just click the default and don't even think about it for decades. And their 401k buys a whole bunch of different assets like funds and funds of funds that basically just buy everything. And so it's, Bitcoin treasury companies are getting into those index funds and getting into those quote unquote massive diversified portfolios. And so it's kind of like if fiat is actually like not sustainable or there's going to be problems down the road and like Bitcoin is the lifeboat, fiat is this Titanic that everyone's on. We don't necessarily want there to be one lifeboat and just a few of us get off the boat. We want it to be like a big, nice cruise ship comes by and everyone gets on the big cruise ship and then, everyone's happy because everyone got a little bit of Bitcoin before the Titanic went down. So like, that's kind of what I think of, Bitcoin treasury companies and Bitcoin ETFs. It's like, is it the best way to hold, all of your Bitcoin? Of course not. But is it a good way for like a lot of people and a lot of institutions? Like, absolutely.
Right. That was very well said. And we don't want the overnight sudden collapse of fiat. We do want this more gradual transition because, I've been in Bitcoin for a few years. Very few people that, people know I'm in Bitcoin. I work in Bitcoin. I talk about it all the time. Nobody's coming to congratulate you after Bitcoin, quadruples in a 2-year period, right? And there's a lot of bitterness and resentment. And in this kind of doomsday hyperinflation scenario where fiat collapses, like that sentiment against Bitcoiners is going to be far more profound if you don't have these lifeboats, if you don't have MicroStrategy exposure in the S&P 500 or Bitcoin ETFs in people's 401ks and that sort of thing. And so we want to Trojan horse Bitcoin into people's lives as much as possible. So if/when the fiat system continues to deteriorate, we're not the only ones on the lifeboat. We want a lot of people on that lifeboat for sure.
Yeah, exactly. And that's why I think, strategy potentially getting added into the S&P 500 will be like a huge deal. Strategy and Semler Scientific and other Bitcoin treasury companies are included in various index funds. Like Strategy is in QQQ, which is in a pretty significant one. Similar is in, a few small cap index funds as well. And so like as these companies grow or as Bitcoin continues being NGU technology, these companies that are in these index funds that are weighted by the market cap relative to all of the other market caps of all the other equities that these index funds hold, these index funds are going to increase their allocation to these companies over time as long as Bitcoin keeps going up and as long as these companies keep going up, which means like we already have kind of created, this cruise liner that's like rescuing people. Most people just have no idea that it exists. And as Bitcoin continues to monetize, it becomes more clear that they are jumping on the cruise liner. That's and the Titanic might be sinking, or maybe the Titanic's not necessarily going to sink, but we're just upgrading to like a much better boat.
Yeah, that could be it too. Do you think I think it's certainly headed in this direction. We may already be there. Is Bitcoin too big to fail as more of these companies get included in index funds? Like could we reach that scenario, or have we already?
It's a good question. I mean, I feel like it will depend on like what exactly you mean by too big to fail. Like
meaning if Bitcoin draws down significantly, the economy starts to go into a recession and they print to support the Bitcoin price.
I think that's yeah. I mean, I think that I don't know. Like if you look at Bitcoin in a box, I'd say it's probably not too big to fail, like in of itself. However, Bitcoin drawing down like 60 or 80% in my mind probably means like other things are failing as well. And so, yes, like it's too big to fail in that sense. We'll get to a point where it's like real estate, where like, real estate falls 80%. Like we've cut interest rates and we've done everything far before that. It would even happen. Like same with stocks. Like we can't even take a 30% correction in the S&P 500 without everyone losing their mind. The Fed, dropping interest rates to zero, and Trump or Biden or whoever spending a bunch of money that the federal government doesn't really even have. And so I think that will be an interesting point where it's like Bitcoin can't draw down like 50% or more, just like the stock market can't draw down. And maybe we are there to some extent. Like maybe that's part of the reason why it can't fall 80%, because the government's going to step in at some point. Maybe not necessarily because Bitcoin did, but because that means other things are starting to fall at that point. And Bitcoin is so large that it can't really fall 80% without other things falling, a little bit, or 20% or 30%. So yeah, I mean, it's potentially, yes, it is maybe potentially too big to fail. However, like everything, in the long run, nothing's perfect. Bitcoin is not perfect either. It could fail. Other things could fail too. So in that sense, like nothing is too big to fail. But yeah, like in the context of like fiat money and markets and governments, maybe Bitcoin is too big to fail at some point, or it's probably pretty close if it's not today.
Yeah, I think that was very well said. I mean, even if you think about the 2022 bear market, it wasn't just Bitcoin that dropped 75%. All the Mag 7 dropped like basically just as much. And we didn't outright have a recession or, explicit money printing, but liquidity did rise. We did see the banking system start to really crumble. They had to have an emergency facility to prop that up. So I think, we're going forward, it will be much the same, where if Bitcoin does fall 75%, at a minimum, everything else is down to a significant degree as well and will require some support. So Bitcoin, itself may not be too big to fail, but Bitcoin going down would likely be the result of other assets in peril.
Yeah.
One thing I'm really curious about from a personal standpoint is what is it like buying a crap load of Bitcoin? Because in July, Semler bought, I think it's 385 Bitcoin, about $45 million. Now, how is that different from, I pull up my phone, I go to Strike or River or Swan and smash buy? Or is it really as simple as, we're wiring, $40 million to the exchange and hitting the smashing the buy button? Like, what's the process there when you're buying hundreds of Bitcoin?
Yeah. It's a pretty interesting process. I don't know exactly, like, I probably can't get into super specifics on this, but I'll like say like some things that I probably can say. It's like, it is fairly as simple as like, sending a $20 million, $40 million wire to, an exchange or a partner that you would have. And it's not like, they're not necessarily, clicking smash buy $40 million, although Bitcoin is a fairly liquid market. So you probably could, do something like that. But it's typically like, deploying a lot of orders over, a multiple hour period to, maximize the best price and minimize fees and so on and so forth. But one thing that I will say, it is interesting because, being involved in helping, acquire like hundreds of Bitcoin at a time for $20 million, $40 million is really cool to see. But it provides a whole nother realization of like what league strategy is in when you see, strategy just acquired 50,000 5,000 Bitcoin for $500 million or whatever that would add up to. And I'm like, wow, like those guys are buying a lot of Bitcoin. Like, 20 to $40 million is a lot of Bitcoin, but $500 million or $1 billion, that's like a ton of Bitcoin. Like these guys are stacking like crazy. So yeah, it's very interesting to see. And it's different from obviously an individual, but it's not. Bitcoin market is fairly liquid, so it's not too much different. In the sense that like it's not like we buy and the price just immediately goes up. Like we're not that big, and 20, $40 million wouldn't really move the price, and like that just kind of also shows how big the Bitcoin market really is now, which is like mind-boggling to think about.
Right. And that's why one of the main reasons this treasury company play can't be replicated across other crypto assets, aside from the fact that they're technically inferior, they don't have the trading volume. You couldn't do a $500 million smash buy on Cardano or Ethereum or any of these, maybe Ethereum, but that point aside, it's very fascinating because Bitcoin really, I think it's doing about 40 billion in volume a day. It's some absurd number. It's a huge asset.
Yeah. Yeah, absolutely. It's insane. It's hard to fathom.
Yeah, it really is. So yeah, I'm super excited about the future. I think, Joe, you're crushing it over at Semler. The last question I have is how can investors think of the medical business? Because I'm super bullish on the Bitcoin side of things, the leveraged Bitcoin equity. All of that makes a lot of sense to me. But I think myself and a lot of other retail investors, it's hard to distinguish between core business and Bitcoin treasury company and where the market can kind of value both of them simultaneously. So can you elaborate on Semler's medical business?
Yeah. So yeah, obviously I'm director of Bitcoin strategy. So I'm not involved with like leading the medical business or, I don't have too much like deep insight into the, the past and the future of exactly how the medical business is operating. The way that I would think about it is like, you can think about valuing Semler or any Bitcoin treasury company with like a sum of the parts analysis where you can say, okay, Semler holds 5,000 Bitcoin on the balance sheet, might have a valuable medical business, which can be broken into two parts. One, we have like the existing QuantaFlow business, which is like the core business that Semler was mostly built on. And then Semler just started this additional entity called Cardiovanta, which is like all future medical products are going to be inside that entity. Obviously, Semler owns both entities. And so you can kind of like try to value the company with the sum of the parts analysis, saying like, okay, well, what's Bitcoin treasury worth? That might be the Bitcoin plus the intelligent leverage strategy plus anything else that we're doing that might help us accretively accumulate Bitcoin over time. Then you might have the existing medical business. You could look back at the past of how that business is performing. You could try to guess, how it's going to perform in the future. And then same with Cardiovanta. You could say like, okay, well, with the new products, looking at the total addressable market of those products, like try to come to evaluation of that part of the business as well. And then you could sum all of those parts together, and then that's how you could try to value Semler Scientific. So, historically, the medical business, was, I can like go back like 2020, 2021, the medical business was like booming. It was a growth company doing incredibly well, reached $1 billion market cap in a relatively short period of time. And 2022-ish or late 2021, there were some regulatory headwinds that occurred that made it to where the business was still generating money. Cash was piling up on the balance sheet, but growth had slowed a significant amount. And so Semler went from this growth play to more of like a value play. Like it just, makes a lot of money, but it's not growing very fast. And then a few years go by with the value play. Eric Semler, who's now chairman of the board, was like, well, what are we going to do? Like the market is not valuing our stock appropriately. Its revenues are not growing. Cash is piling up on our balance sheet. Look back, and it was basically like MicroStrategy in 2020, where they had this, software business that was not necessarily growing much, had a ton of cash, didn't know what to do. Eric, decided like, well, we could look at M&A, we could look at a large dividend, we could look at share buybacks, or we could copy strategy. And that's kind of what they did. They decided to adopt Bitcoin as a treasury reserve asset. And so now we're in the third phase of the business, which is like the treasury reserve asset phase plus the operating business phase. And so, that's kind of how I thought about the history of Semler. That's kind of how I think about it today is like, you have a treasury, you have the Bitcoin treasury, you have the valuable operating business that can effectively be broken down into two components. And then if you are, healthcare analyst, you could try to like determine what those parts are worth of the business. But obviously, as an individual investor, you would need to do that yourself. But that's kind of how I think about it.
Yeah, that makes sense. And I don't think I'd heard the backstory. So that's helpful context. It is similar to the strategy story. And I think this is a feature, not a bug, of Bitcoin treasury companies, right? It is the low growth companies that need Bitcoin the most. And this is why maybe you disagree here, but I don't think we'll get a Mag 7 to starting to buy Bitcoin this year, next year. I think it'll take a couple more years because right now they have such high growth, they have such massive multiples, and people are already treating their equities kind of like Bitcoin in a way. They get this passive bid. They're super volatile. It's the low growth companies that need Bitcoin the most. And Metaplanet was a dying hotel company. Strategy was a dying business intelligence software company. And these companies are able to plug into Bitcoin and completely turn themselves around. And I think it's a fascinating story. Do you have any thoughts on kind of the Mag 7 take there? Do you think we'll see any, Facebook or well, I guess Tesla has Bitcoin, but they're not a Bitcoin treasury company. What are your thoughts there?
Yeah. I mean, I think you're generally right. There's always the chance that there's Zuckerberg or someone comes in and just goes all in on Bitcoin. Obviously, that can happen. But I agree with you. It's like it's likely not going to be a Mag 7. If it is, it's like one of the Mag 7s that is like not growing as fast and like is at risk of dropping out of the Mag 7. It's probably going to be more of like zombie companies that are cash flow positive, that are stacking a bunch of cash on their balance sheet, that don't really know what to do with the business, that don't have any good M&A opportunities, that have a need to know Bitcoin basically, and they're going to be the ones that put Bitcoin on their balance sheet, which is exactly what we've seen in the past. And there's thousands of these companies out there in the world. Not everyone is a Mag 7 growing at 20-30% annually. So most businesses are probably in need of a Bitcoin treasury strategy.
Yeah, I think that's where a lot of people that are in the Bitcoin echo chamber, which I am definitely in that, it's hard to understand. There are literally thousands of companies in the world. And so we may think, the Bitcoin treasury company space is oversaturated. There's too many players just because it's the hot topic right now. But in reality, barely any companies hold Bitcoin yet. So we're still extremely early.
Yeah. And like you can be a company that adopts Bitcoin as part of your treasury and like doesn't mean you have to shut down the other business. In fact, like Semler is a good example. Like the healthcare business still exists, still running. And I think other companies can do the same, even if you're a fairly successful company.
Yeah, and it can be low key too. Like we saw, what was it, Figma? They IPO'd and it
Yeah.
was like, hey, we had 10, $50 million worth of Bitcoin or something like that. Like I think that's another story that will be, I guess it won't be a story. It'll be kind of a silent trend, but I'm sure over the long run we'll see companies adopt Bitcoin as just an asset, just something they hold, but they're not vocal about it. They don't want the hype of being a Bitcoin treasury company. Maybe they don't want their stock to be super volatile, but they do want to retain their earnings. So I think that's something that will definitely 10 years from now look back and will have been a trend.
Yeah, absolutely.
Well, Joe, I appreciate you taking the time to come on the show and talk. Is there any final thoughts you want to share with the audience? Anywhere you want to send them?
Yeah, no. Thanks, Mitch, for inviting me on. This is fun. Great to see the great work that you're doing at Blockware. If you want to learn more about me, you can search me Joe Burnett on Twitter or Joe Burnett on YouTube. And if you want to learn more about Semler Scientific, you can go to ir.semlerscientific.com.